As discussed earlier on, so when we calculate our purchases, our net purchases here, it'll simply be the total purchases minus the total returns. So our net purchases will be 154,000. From that 154,000, you minus the value of your closing stock, and it will give you cost of sales. In this case, cost of sales will be 139,500. Please note that gross profit is simply sales minus cost of sales. So you will simply take 176,000, which was given to you as sales, you minus cost of sales of 139,500. Okay, it's 139,500 to get your gross profit. So you simply take your total sales. The gross profit will end up being 36,500. Your gross profit will be 36,500. Gross profit will simply be 36,000. When you calculate stock holding period, this is the formula that you have to use. Average stock, trading stock divided by cost of sales. Average trading stock is simply balance of trading stock at the beginning of the year. In this case, it was 31,500, if you still remember very well, plus balance of closing stock, which was 46,000. So you add the two, you divide them by cost of sales of 139,500, and that will simply give you multiply by 365, it will simply give you stock holding period of 101,39 days. So that's for how long we will be holding our trading stock, which is slightly above 3 months. So we expect to hold stock for between 3 to 4 months. Okay. Let us look at stock turnover rate. Stock turnover rate simply tells us how long do we plan to convert stock into turnover or simply cash. Okay, that is supposed to be 139,500. So in this case, your stock turnover rate will simply give you 3,6, which is 3 months, between 3 months and 4 months in essence, which is not that bad at all. All right, let us look at this example here. Now here they still want us to calculate the value of closing stock. So you need to break this down. Remember I said to you, the value of your closing stock will be made up of your last purchases. So your last purchases are the purchases you made on the 25th, as well as the 30 days. In this case, we sold 18 bicycles. So how do we work around this? If there's just no difference between this and what we did earlier on, so we just proceed with what we did earlier on. So the best place to start is simply to determine what you have purchased and what you have returned. We purchased 6 bicycles, okay? And on the 3rd of September, we purchased 12 bicycles. And of these 12 bicycles, we actually returned 2. So 2 will be out, okay? And then we purchased more bicycles, 15 bicycles to be precise. The cost price we realized is different, okay? It's actually going up. And we actually sold only 18 bicycles, and we sold them at 2,700 each, which will give us sales. So using first in, first out methods, these bicycles will be sold as follows. So 18 will be sold, so we'll be left with, so basically we'll be left with how many? Let me check. We will be left with 15 minus 2, which is 13. We will be left with 13 bicycles, and the cost price of these bicycles each will simply be 1,500 times 13, and that will give us 19,500, which is the value of our closing stock. Okay, Now let's look at the number of bicycles. How did we get to that? Number of bicycles on hand at the beginning of the year was 6. We purchased and we returned 3, actually 2. So number of bicycles that were available to be sold were 31, but we only sold 18, meaning that the closing balance was simply 13, which was made up of all of this 13 came from the last purchase of 15 bicycles. Obviously, we were left with around 13 of them, if I'm not mistaken. Yes, we were left with 13 of them. Out of the 15, we were only left with 13, which was not sold. Okay, so hence the value of these bicycles will simply be 19,500 because the cost price of those 13 bicycles was 1,500. Multiplied by 13, it will simply give us that 19,500. Calculate cost of sales, we will simply have to use these methods. Remember, perpetual and periodic, they simply depend on when you sold. They sell for the month you sold. We basically sold this on the 30th. So that's when you calculate cost of sales under both methods. So it will pretty much be the same. Now, under perpetual, this is how you will show it because there's no opening and closing. You just show it as cost of sales. We'll simply take 48,600 minus cost of sales of 21,500. It will give you gross profit of 27,100. Under periodic, you will simply use this method. On the debit side, you'll have opening, purchases minus returns, and coverage and purchases. On the credit side, you will only have closing. Okay. So when you minus, obviously, it will give you a gross profit, which is 27,100. This is just a recap. Please note that the value of your closing stock here will simply be 19,500. It will not be at 25,000. Trying to figure out what's happening there. Let us look at this example here. Pay attention to your returns to realize that your returns were 60. That 60 will come from the 6th of March purchases, and the other one will be 150. That 150 will come from the 24th of June 2013 purchases. So out of 880 purchases, we will be left with 880,000, well, 880 minus 150. So this is how we're going to calculate it. My focus will be on the 6th of March. Do you realize that we are only left with 620? It's because 60 of those were returned, okay? Same with the 24th of June purchases. 150 of those were returned. That's why we minus them for us to calculate our purchases. The value for our closing stock is 970. This 970 will be made up of the 730 from the last purchase, which was the 24th of June 2013. The cost price of those purchases was 120. Hence, the total will be 87,600. To make up that 970, how many units more do we still need? Obviously, the remaining units, the extra units that we need will come from the 6th of March purchases. And the extra units will be 240 multiplied by 100, it will give you 24,000. 24,000 when you add it with 87,600, it will give us the value for our closing stock, which is 111,600. Gross profit is just sales minus cost of sales, and you will simply take your gross profit divided by cost of sales to calculate your gross profit percentage. Stock holding period, remember from the previous, it's average stock over cost of sales. Your average stock is your opening balance, which was 48,000, plus closing balance that we just calculated of 111,600. You find the average, you divide that by 2, and you divide the whole thing by cost of sales, multiplied by 365. It'll give us 69.35 days. Now, the business aims at a markup of 30 on cost. As the internal auditor, what would you investigate and explain? So we will investigate excessive discounts. Obviously, if we offered high amounts of discounts to customers, our markup in essence, when you think about it, it will simply go down because discounts reduces sales. And if sales decrease, it means that your gross profit will also decrease. Incorrect markup calculations, too many items sold at seasonal sales or discounts. So discounts reduces sales, which reduces our gross profit or markup. Or simply it means theft of cash or stock. So if cash is stolen, sales will decrease, obviously. If stock is stolen, obviously units that we sell will also go down, it therefore increasing our expenses. Counter competitors' prices, it means that we are selling less because we have our competitors are simply selling goods, the same quality goods at best prices, or we'll have to increase our selling price in order for us to increase our markup in the future. Buy in bulk, when we buy in bulk, that will reduce our cost of sales, therefore increasing our gross profit. So we need to buy from a cheaper supplier, but you need to remember when you buy from a cheaper supplier, that will simply compromise the quality of the goods that you are selling. Okay, the stock holding period for 2012 was 30 days. Should Mohammed be satisfied with the stock holding period for 2013? No. Okay, the reason is because stock holding period has increased from 30 days to 70 days, which is a little bit too much. That is over 30 days more. Okay, which is 40 days more in this case. Okay, so that is a little bit too much. This is not good as money is tied up in stock. When money is tied up in stock, it means that it's not earning interest. You could have just taken that money and put it into a fixed deposit to earn interest, but it's tied up in stock that you cannot convert into cash. Instead, you're incurring more holding cost. Stock might not be sold if it deteriorates. That is, if we are selling perishable goods, more chance of stock theft. So we have too much stock, there's a high chance that it will simply be stolen. Okay, if you chose yes, you can simply say stock levels too low in 2012 and now less likely to run out of stock. Okay, but remember, you don't want your money to be tied up in stock, so you need to be holding stock at an optimum level. You don't want to hold too much stock, you also don't want to hold too little. Now a jump from 30 days to 70 days, that is a little bit too much. Okay, better prices through bulk purchases. Okay, that might be the reason why we bought more on bulk purchases, because we buying them at cheaper prices, which will result in high gross profit in the future. Now let's go to weighted average method. Under the weighted average method, we need the average price, the value of closing stock, and the value of cost of sales. So we need the average price to calculate the value of closing stock and to calculate the value of cost of sales. Okay, weighted average price is simply opening value plus purchases minus returns value minus closing stock value divided by number of units of opening stock plus number of units purchased minus number of units returned minus number of units closing. Okay, so you realize it's simply value divided by units. So that's how we calculate our weighted average. And these are simply the features of weighted average method. Weighted average cost method, the average cost price of the stock is used at all times. The system is best suited to businesses which sell large volumes of identical small items of stock in each range, like a Pick and Pay shop, right? Okay, weighted average value of the stock is calculated by dividing the total cost of the stock purchased by the total number of units purchased. The weighted average value is then multiplied by the number of units on hand to determine the value of closing stock. Carriage inwards and other expenses carried purchase in the stock are also included in the calculation, as these increase the actual cost of the stock. Weighted average cost might not be reflected, well, it might not reflect the current costs, especially if you purchase some of the items long time ago, and obviously over time, the prices of those items will increase. Okay, let us look at this example here. Question is, let's start first by calculating simple things like your purchases, your A and your B. Now let's calculate A. A in this case will simply be 250 times 125, which is 131,215. When you calculate the value for the 25th of February purchases, you'll take 260 times 105, and then you add the 4,000. Okay, that 4,000 is fixed. Had they said per item, then we're going to multiply by 4,000. So you're going to say 260 times 105 plus 260 times 4,000. If they said carriage and purchases was per unit, but in this case, for all those 260 units, we paid 4,000. That's why we just take 260 times 105, that give us the cost price, and then we add transportation of 4,000, and that will simply give us 31,300. Our total purchases will be 121,300. Please note that we returned the handbags during the month, which is the 26th of February, and that happened after our last purchase, obviously before the 26th of February was the 25th of February, and the cost price of items there was 105. Okay, so the value of these items will be 1,015. Goods return, we don't have carriage on goods return because we cannot claim transportation for goods return. Remember, you might hire someone just to transport those goods for you, and there's no way that you will say to them, may I please have a refund because the goods that you delivered to me, I had to return them. Now, here's the thing, you were not given sales here. Question is, how do you calculate sales? You will, however, given the value of your closing stock. So to calculate sales, you will simply take your opening, which is 250. You add it with your purchases, which is 1,010, you minus your returns. It'll simply give you your total units available to be sold. Which is 1,250. And then you minus your closing, it'll simply give you total purchases, your total sales for the month, which is 975. You were given the sales value per unit, selling price per unit. So to get your sales, you will simply take these two amounts and multiply them together to get your sales. Your sales in this scenario will be 219,375. Now to calculate the closing stock and the weighted average method, we need the weighted average cost per unit. So you will simply take your opening plus your purchases, you minus your return, and you divide by the number of units available to be sold, which is, so I did show you that 1,215 is simply made up of the 250 from opening number of units plus your purchases, you minus your returns, which is 10. So it is simply the same thing. It'll simply be what goes with this will be 250. What goes with your purchases will be 1010. What goes with your returns will simply be 10. And that will give us that 1250. So our weighted average cost will simply be 121.2, which is the value that we're going to use to calculate the value of our closing stock. And you'll simply take number of units of closing stock, you multiply by that, it'll give you 33,330. Read through this. Okay, these are the calculations. These are the examples. Please read through it. It's similar to what we've just done now. Here's another transfer. Pause it, do it. And then check your solutions thereafter. I'll try these ones as well. Cheers, goodbye.